Hi everyone, welcome to Express Lane. My name is Justin Lin, investment analyst at Global X ETFs, and I'll be guiding you through what happened last week and the green lights, yellow lights, and red lights for the week ahead. Last week, markets were mixed as investors positioned for pivotal central bank meetings across both Australia and the US. In the US, investors were a little bit lost for direction as quantitative data showed that inflation was slowing and labor markets were weakening, which is positive for rate cut odds. However, qualitative data showed that business sentiment was high and consumers were also positive heading into 2026, which could boost demand and trigger hotter inflation. In Australia, equities were weaker as a weaker GDP readout failed to change the rate cut path, and materials and energy sectors were the only bright spots for the week as commodity prices were higher. Now, onto the green lights, yellow lights, and red lights of this week. We have a big week of economic data ahead of us and some notable earnings as well. For the green lights, small caps may be having their time in the light as interest rates are falling in the US and valuation concerns still linger around US mega-cap tech. Small cap ETFs such as the Russell 2000 outperformed the S&P 500 by 1.3% in the first week of December. Perhaps it is a sign that small caps are ready to outperform and catch up after years of underperformance. For the yellow light of this week, money markets are fully expecting the Federal Reserve to cut interest rates this week. The commentary around the cut will actually be the tone setter for equity markets towards 2025 and 2026. Investors should be concerned around a hawkish cut that can be identified through hawkish commentary or descent in a dot plot. This could present the biggest risk to a Santa rally for the rest of the year. For the red light of this week, after a hot inflation reading in late November, the RBA is not expected to deliver any more rate cuts this year. And while the RBA has actually put rates on hold in the December meeting, investors should continue to watch out for resilient labor market numbers as they could trigger the data-dependent RBA to bring forward rate hike expectations. Thank you for tuning in to this week's Global X Express Lane. If you have any comments or questions, please leave them down below in the comments, and I look forward to seeing you next week.